Well, if the Melbourne Cup is the race that stops the nation, today it's the meeting that stops the nation. It's the meeting of the RBA. They're meeting to almost certainly increase the cash rate, which will see an increase in mortgage rates for everyone buying a home. Joining me now is Mark Bevan, founder of Joust. Mark, is that fair? Are we almost certainly going to see a rate rise?
Yeah, good morning, Graham. Look, we think there's three scenarios, all probably of equal possibility. We think a rate rise from 0.1 to 0.25 is on the cards, or potentially an even steeper rise of 0.4 from 0.1 to 0.5 all the way, or the Reserve Bank might leave it till next month, the meeting in June. So three possible scenarios there, but clearly rates are certainly heading north.
If they don't make a decision today, why would they be leaving it a month?
Oh, look, I think it would really be to do with the election. Just the preference to not make a move so close to an election. And there is some employment data expected in the next couple of weeks as well that be keen to have a look at. And
if there is to be a rate rise, be it today or in a month's time, will that be it for a while, or can we expect more rate rises?
Oh, no. Look, our view, Graham, is that this upward cycle will need to be fairly sustained to cope with the inflation pressures. Most of the economists are tipping as many as or between 4 and 7 rate rises for the remainder of 2022. So, that's a big concern for particularly young families with large mortgages.
Yeah, and that's the point, isn't it? A lot of these young families would never have been in the situation where they're buying a home and had a rate rise. I mean, how many years has it been since there has been an increase?
You're right, Graham. This will be the first rise since November 2010. So, as you say, relatively new borrowers haven't had to deal with this. Look, our view at Joust is the crucial thing is not so much what happens at 2 p.m. South Australian time this afternoon, but what happens for the whole upward interest rate cycle. If the listeners' home loan rate moves from 2.5% to 4.5% over the next 12 months, that can be, on the average loan of $500,000, that can be $10,000 a year extra in interest, or $800 per month.
When you look at the figure as it is at the moment, and those older listeners will recall the heady days of 18%, a lot of older people are saying, gee, why should younger people be concerned? We're still talking single-digit numbers.
Yes, look, that's a valid thing, and look, I think on balance, rates will settle at a more normalised rate. The 0.1% that the RBA got down to was really an emergency setting, influenced a lot by COVID. But the difficulty for young people these days is the banks have been lending as much as 6 times their income, to get into their first home. Back in the day, Graham, as you say, of 16, 17, 18% interest rates, the banks were a lot more conservative. You could probably only borrow, say, a maximum of 4 times your income. So the household debt is a factor that we've got to keep an eye on as well.
With the inevitable rise coming up, what advice would you have, particularly for young home buyers or people already in their homes?
Graham, it's so important to be on top of what your bank is charging you, exactly what the rate is, including fees, and then to use websites like Joust to generate a bit of competition around what other alternative home loan rates that could be lower, more competitive, that you could be eligible for. And really, it needs to be an ongoing process, Graham. As I said, this cycle is likely to run for 12 or 18 months. And so it's the risk is that you just look at it once and you think, oh, well, no big deal. But staying on top of it would be our advice. Yeah,
I was going to ask that question because you get into a bank or lending organisation, say this is a terrific deal, and then you put it on the back burner, don't think about it. But things change, organisations change, so you've got to keep vigilant, keep looking.
Indeed, that's right. What's a good rate today? If your bank moves with larger rate increases than someone else, then all of a sudden your rate is less competitive. So it is incumbent on everyone, certainly with larger home loans, to be diligent.
Have you found people are fixing the rate, or are they sticking with variable?
During last year, we saw a large swing towards interest rates, but that's often driven by the fact that the headline rate of fixed rates can be lower than the variable rate. So that can drive people to sort of take the cheapest headline rate that's available. What's happening now, of course, is the banks aren't silly. The banks are increasing their fixed rates considerably, and it's much harder to get a competitive rate, fixed out beyond anything more than 2 years.
What's your view on having a cocktail of a variable part fixed rate?
Well, I think there's an element of common sense there that to have a blend. If your bank can offer you a part fixed, part variable rate, that's a reasonable that's a reasonable hedge.
With I'm just looking at the time now. About 3 hours from now, people will be anxiously looking forward to the time. So, what is your gut feel? You've given us 3 scenarios. What is your gut feel if you had to pick one?
My personal view is I think the RBA may hold, but then increase by 0.4% in June. But I'm in the minority in that case. So most of the economists think it's very certain that there'll be a rate rise this afternoon.
Mark, thanks for your time.
All right, Graham.
Mark Bevan, who is the founder of Joust, and as the advice we've had over the past week or so is shop around.